Today is Monday, June 8th, 2026. 4 days ago on this channel, we showed you Marvell Technology with an RSI of 85 and said three words: do not chase. On Friday, the stock crashed 16.74%. We break down what happened and what comes next after the global market recap. Friday's closing data, and it was a historic session. In Asia, Japan's Nikkei fell 1.31% to 66,588. Hong Kong's Hang Seng dropped 1.15% to 24,961. Shanghai lost 0.74%. In Europe, Germany's DAX fell 0.75% to 24,759. France's CAC lost 0.32%. London's FTSE barely changed. In the U.S., the worst day for technology stocks since April 2025. The Nasdaq fell 4.18%, closing at 25,709. The S&P 500 dropped 2.64% to 7,383. The Dow Jones fell 695 points to 50,866. The VIX, Wall Street's fear gauge, surged 39.68% to 21.51. Chip stocks shed approximately $1 trillion in combined market value in a single session. Before the chart, a callback to our June 4th video. 4 days ago, the Global Market Pulse Daily showed Marvell Technology with an RSI of 85.88 and a Williams percent R of -0.40. We said, in exact words, the easy money is already made. Chase at your own risk. On Thursday, Marvell hit its all-time high of $316.43. The next day, it fell 16.74%. That is what reading a chart before the crash looks like. Three confirmed events drove Friday's sell-off. First, non-farm payrolls for May came in at plus 172,000, nearly double the consensus estimate of 80,000. The stronger result pushed 20-year and 30-year Treasury yields back above 5%, killing remaining hopes for Federal Reserve rate cuts. Second, a skeptical report on AI spending circulated among institutional investors, questioning whether data center capital expenditure would sustain current growth rates. Third, Meta announced a secondary stock offering, adding supply pressure. The combination triggered a coordinated unwind of the most stretched AI chip names, wiping approximately $1 trillion in a single session. Marvell Technology. The chart tells the complete story from the Jensen Huang surge to Friday's crash and where the stock is heading today. On Tuesday, June 3rd, Jensen Huang called Marvell the next trillion-dollar company. The stock surged 32.5% to $290.79. On Thursday, it hit an all-time high of $316.43. Then Friday, the crash. Opened at 299, hit a low of 261, and closed at $263.47. A drop of $52.96, 16.74%, on volume of 56.18 million shares. This morning in pre-market trading, the stock is showing some recovery at the time we're doing the research. Means buyers are stepping in. Looking at the charts, the EMA 20 at $220.62 is now immediate dynamic support, the first floor. The EMA 40 at $188 is the second support level. The MA 50 at $165.35 is the third support level. Current price at $263 is above all three. The trend structure remains intact. Now here's the most important comparison on this chart. 4 days ago on June 4th, this channel showed Marvell with an RSI of 85.88 and a Williams percent R of -0.40. We said both were simultaneously at historic extremes, a caution signal, not a sell signal. Today, after the 16.74% crash, both indicators have reset. The RSI is now 65.02. That is healthy, below 70, not overbought. The Williams percent R is -37.60, neutral zone, The MACD histogram is 9.11, still positive, and the underlying momentum is intact. What this tells you, the crash was a violent reversion from an extreme valuation stretch. It was not a change in the fundamental story. Marvell's business, custom AI chips for Amazon, Google, and Microsoft, is still growing. The company still raised its fiscal 2028 guidance to $16.5 billion, and there is one more confirmed catalyst. Marvell joins the S&P 500 effective June 22nd. Every index fund in the world that tracks the S&P 500 must buy Marvell before that date. That is structural demand, not speculation. On the other hand, this is a lower risk entry point if you wish to invest in Marvell compared to chasing it at $316 4 days ago. But remember, no one can predict the market. One new catalyst can fully turn around the trend in either direction. Therefore, investing in batches, or dollar cost averaging, is a safer way to invest in this choppy market. You spread your risk across multiple entry points rather than going all in at one price. 3 things to watch this week. 1. Marvell at $263 on last Friday close. RSI 65 is healthy. EMA 20 at $220.62 is the first support floor. S&P 500 entry. June 22nd is structural demand. If you are interested in Marvell, dollar cost averaging is the disciplined approach in this environment. 2. The Nasdaq at 25,709, down 4.18% Friday. Yields above 5% are the headwind. Watch whether the index can reclaim 26,000 this week. 3. SpaceX IPO on June 12th, the biggest private company in the world listing publicly. That is this week's headline event. Stay tuned. That is your Global Market Pulse Daily for Monday, June 8th. Subscribe for tomorrow's update, posted every morning at 7 a.m. Eastern. Happy trading.